Quite a year it has been for the Nifty, right, this time around. But there are some stocks that have made records, not necessarily in a good connotation. And we'll look at some of those. We start off with the index heavyweight, that is Reliance Industries, and with a 5.5% drop that this year that the stock has had, this may end up being the first year since 2014 that the stock has delivered negative returns. Now, yet the street remains bullish, and most analysts continue to have a buy recommendation on the stock. Price targets ranging anywhere between 1350 to as high as 1950 rupees on the stock. But on to the other company that we are talking about is Asian Paints, and it wasn't a bad year until the last quarter results, but since then the drop has taken it to be the worst calendar year on record for the company. Now, in fact, since 2010 the stock has delivered negative annual returns only thrice, and two of those years being 2022 and this year so far. Most analysts now have a sell rating on the stock, targets ranging from 2080 rupees to as high as 3750, but the stock is veering more towards the former right now. On the flip side, Trent has been a wealth creator and a giant wealth creator at that, and it is also the top performer on the Nifty this year. The stock doubled last year, the stock has doubled this year as well, and starting 2014 the stock has had positive returns every single year. The street continues to remain bullish on the stock with price targets with as high as 9350 rupees. Mahindra & Mahindra is a turnaround story. The stock has had its best year in terms of returns since 2009. The stock is up 70% this year as well, and only 3 negative annual returns in the interim between 2009 and this year. The street remains constructive, targets of anywhere between 2700 to 3700 on the stock. Now, HDFC Bank, positive returns every year since 2013, but 3 of those last 4 years are returns in single digits. Yet no analyst on the street has a sell rating on HDFC Bank, with price targets ranging up to as high as 2550. Now, FMCG is a sector that has disappointed as a whole this year, and HUL is among those disappointments. A 12% drop here, which has made it the worst calendar year so far since 2004, and yet has delivered negative returns only 4 times since 2007. The street though is optimistic, analysts giving targets of up to 3400 rupees on the stock. Staying with consumption, Titan is set for its first negative calendar year after 2016, and since 2016 the gains have ranged between 10% to as high as 150% on the stock. The street though expects the stock to touch as high as 5000 rupees, but the bears keep it at as low as 2800. And rounding off this consumption theme is Nestle. If HUL was the worst year since 2004, this is the worst year for Nestle since 2002, and the MNC has given negative calendar year returns in these 5 instances. But most analysts have a hold or a buy rating on the stock, price targets ranging close to 2900 rupees. Now, banks make an appearance here with IndusInd Bank, positive returns in 22 and 23, but the worst performer on the Nifty this year, down 40%, and is the 5th time in the last 7 years that the stock has had negative returns. Yet 37 analysts continue to maintain a buy rating on the stock, targets ranging up to 1950 rupees. And lastly, despite all the news flow, Adani Ports, news flow this year and last as well, Adani Ports has managed a positive calendar year return, the 5th time in a row that it has done so, and analysts too have a near consensus buy rating on the stock, targets ranging close to 2000 rupees a piece. So the Nifty may have had a 9% return so far this year, but it is specific stocks that have grabbed headlines, some good, some not so.
For more news and updates, all you need to do is follow CNBC TV18 on all of our digital platforms.